Hi, I'm back today with Michael Lassiter from CMG Home Loans, the preferred lender that I work with. And we're continuing in our lender interview series to support National Mortgage Professionals Month, which is in the month of September. Michael and I are going to talk today a little bit about pre-approval, what it is, and how is it different versus a pre-qual, and then talk about different financing options. So Michael, why don't you start with talking a little bit about a pre-approval and what that means?
Awesome. Yeah. So in our industry, it's two terms are used a lot, which is pre-approved versus pre-qual. A regular pre-qualification is basically any consumer can go out on a lender's website and fill out an online application, for example, which is pretty common. And they may do a soft inquiry on their credit, but there's really no data verification. That's what a pre-qual is. Okay. Pre-approval is where we like to take our clients. We do that up front, and basically a pre-approval is more detailed. We actually take a look at the income documentation. We underwrite the income up front. It can actually take the buyer up front through the actual underwriting process and actually issue what's called loan commitment, which is basically as if you've already been under contract, and it really takes the risk out for the seller or the buyer, knowing that they're pretty much 100% approved up front. That's the strength in the pre-approval is also leverage when you're in the negotiation process with buyers and sellers as well.
And then if you go through that pre-approval process and then go under contract, is that true that you really only need like an appraisal and some verification, and then the process can go a lot faster? Is that correct? You can close quicker and stuff like that?
Absolutely. It allows us, which we do here, is we have an on-time closing guarantee of 21 days, or we'll pay up to $2,000 in closing costs if it is a mistake of CMG for some reason. But yes, to answer your question, it does speed up the process. At that point, we just need an appraisal done, title work, and maybe update a bank statement or a pay stub, just based upon when the documentation hits.
And that's great. I mean, and you touched on it that, from a seller perspective, it's more beneficial to see a pre-approval versus the pre-qual. And then, I think from a buyer perspective, just, knowing that there's not going to be any surprises in the process, going through that pre-approval process, you're pretty solid on what, the loan amount that they qualify and things like that. That's right?
Absolutely. And also puts your buyers or sellers to have the confidence to know, hey, this is what my payment is. This is what I'm comfortable with up front. So that's all addressed. We do what's called a mortgage plan review with all of our clients up front. And we take them through that option of down payment scenarios, different product type scenarios that may meet their mortgage goals. So they have a very good understanding, and there's no surprises once they go into contract.
That's great. And then I think that's great that you do that. And I always encourage all my clients to go through that process for pre-approval and work with Michael. And, I think one of the most common things, and you probably hear this a lot from people, is that the perception is that you actually have to have 20% down in order to get a mortgage and purchase a home. And I think, wouldn't you agree, like that's one of the biggest myths? And if so, like what percentage of people are actually, putting 20% down versus those that don't? I mean, in your business, what do you see? Is it unlikely to see someone with 20% down, or pretty rare?
It just depends on the buyer, so to speak. But yeah, that is a myth. I mean, there's a lot of programs that allow you to get into the home with zero down still today.
Oh, wow.
There's also incentives for first-time home buyers that are in place. But yeah, I mean, I say statistically, we probably see less than 5 or 10% actually put 20% down or more. I mean, we are seeing some cash buyers in the marketplace, of course, but I'd say, for the most part, 90% of them are less than 20% down on the mortgage. So
very good.
And then if you put less down, and it's been around for years, used to when you bought a home, you had to put 20% down years ago. But these mortgage insurance companies came into place, and all mortgage insurance is there is to ensure the risk of default on a loan, but it allows us to put more people in homes. So basically, we can lend at a higher loan to value, like 95% or 100%. So that's what the mortgage insurance is there for. On the loan is just to ensure the risk of default on the loan until the client reaches typically about 20% equity in their house.
Okay.
And that mortgage insurance by law will be should be dropped at that point.
Okay, that's very cool. And you kind of touched on like, some of the different financing options, and that kind of takes me into my next question is like, if someone isn't putting 20% down or, they're a first time home buyer, what are some of the different financing options that are available?
Yeah. I mean, here at CMG, we're a forward-thinking mortgage bank, and we've I call it innovation in our industry, and we've come out with some really good products. One in particular is called Home Funded. It's not necessarily just for a home first-time home buyer. It can be a move-up buyer as well. But basically, it's the first we created the product with Fannie Mae and Freddie Mac. It's a conventional loan, and we can also do it on government loans as well. But it allows a family or an individual, we set up a home funded account for them. And basically, it's the first mortgage that allows you to crowd fund your down payment.
Oh,
Any
that's cool.
deposit under $5,000 does not have to be sourced when it comes to gifting, etc. So think about, for move-up buyers and some of the clients you service, they have young kids that are 15, 16, 17, 18 that are future home buyers. And we can now set them up with a home funded account, and they can start crowdfunding, just like what's it called online where like GoFundMe, for example. And that's the same way home funded works. We actually literally just put a young lady and her family in a house. She was a member of a large church organization, and the pastor just made a comment in the congregation, said, let's not forget about Sally and Bob that's going to be purchasing a home. And literally with the home funded account, they raised about $15,000 in 2 weekends to help this family get into the home. So that was really cool.
That's amazing.
We also, yeah, that's pretty awesome. But that's the power of the home funded account. There are the other programs. If you're a veteran, you can get into a home 100% financing. There's no mortgage on insurance on that, which is an advantage of being a veteran. Most of your conventional programs are going to require the lease is around 3%. But there are some state programs. Each state has their own housing authorities, so to speak. So if you qualify for the first time down payment assistance programs, we offer those as well. So that 3% normal down payment that's required could be potentially done through the local housing authority with the state.
Okay, that's amazing. And you mentioned earlier about, crowdfunding and not sourcing. I think a lot of people aren't sure, like, what does that mean? So explain how significant that is in this process.
Yeah, so typically gifting is allowed on a mortgage. And so, usually someone in the family can gift a certain part of the down payment to a family member. And there's a lot of documentation with that. Sometimes it gets a little uncomfortable asking for bank statements of a family member, and they don't know who the lender is, so to speak. So again, going back to your question, the power of the crowdfunding is in that situation. If it was a home funded account, if the mother for example, was given a $4,500 gift, we wouldn't have to trouble the grandmother, for example, with the gift letter and the heavy documentation. So we wouldn't have to go out and secure extra documentation to a third party that's required, because on all loans, what they look at over the last 2 months is they're going to look at and source any large deposits. So if it's a deposit that's out of the norm on their regular, pay or whatever, from a lending standpoint, it's required for us to go out and verify. They want to make sure that they haven't created another debt or they borrowed the funds. So that's why the home funded account, again, kind of circumvents that. So you don't have to go back and source those large deposits, anything under 5,000.
That's very cool. That's awesome. Well, thank you so much, Michael, for taking the time today. And we talked a little bit about the pre-approval process and the different financing options. Stay tuned. We'll be talking about more lender topics, including creative ways to pay off your mortgage faster, which is something I'm really interested in, and then mortgages for vacation homes versus second homes. So those are coming soon. If you're interested in connecting with Michael, check out the verbiage below the video. All of his contact information is in there, his website, email, and phone number. Don't hesitate to reach out to him. And if you have questions on purchasing a home in the Raleigh-Durham area, don't hesitate to reach out. And if you're considering the Raleigh area and just researching, check out my YouTube channel, Welcome to Raleigh. There's more videos like this, city tours, community tours, buyer tips, and more information on the real estate market. Thank you again, Michael, and thank you for taking the time to watch our video.
Thanks for having me.